Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, March the 17th. The year's 2022. Let's talk trading. Trading Better, Part 10. This video is for educational purposes only. Your results may differ from mine. Hey, what a day. Are you taking advantage of what's going on with the pound? We had some big news there, the rates. But if you take a look at the weekly, you can see we're green, but you can also see we're 94 pips off of the high and 117 off the low, and we still have two pairs that haven't filled the gap. But when you look at the daily, there's definitely a story. Yesterday, we broke out of the opening range for the week. And then if you look at what's happened today, in the early part of the day, price went above these two wick zones. You look left, and then you can see here a big red candle. And then the news came out and then started breaking through. And then it came all the way down to here. And now it's moved back up, crossing the 0-0 line, which is a trade that we've talked about many times. So we're 118 pips off the yearly low, and we are 411 pips below the yearly open at the moment. Inside bars, we had a few on the daily, so there were some opportunities there. Now, I want you to look at one other thing. We've talked about this before. You see that candle high, and then price moved all the way up here. Well, that created what? An imbalance. And what happened? As you can see, price came back down, filled that imbalance, and turned around. Just something to watch. Does it happen every time? No, it doesn't. It's just something to look for and sometimes take advantage of. You can pretty much place your trades and say, wait a minute, there's this imbalance on the daily. And it's like, it's going crazy. Something needs to change. And basically, you can say, okay, I think it's going to fill the imbalance. You put your short on, you put your stop loss somewhere, maybe there, maybe there, maybe just one pip above that high after it started going back down. And then you just take your chances and see what happens. It's, once again, this stuff isn't difficult once you see it. We've got, looks like 7 pairs over 100 pips with the pound clocking in at 124, to be expected with the at banking announcement. As you can see right here, we had a huge drop. Now, what is this? What do I call this? To me, this is a return bar, meaning price needs to return here. Will it do it? Maybe this week, maybe this month, maybe never. I don't know. That's why we have something called a stop loss. So if I guess wrong, that's what can happen. And as you can see here, price is moving back down at the moment. So green rats definitely got the feast after this. Once again, just trading the double low, which would have been the 3100 line, would have proved profitable. Price near R1, bias is short. That paid off big time today. Huge. And as you can see, we did take out that daily pivot. So price got up to R1. Price likes to take out the pivot. I mean, that was almost a classic setup right there. Okay, weekly missed pivot. We took that out already. The monthly, we only missed it by 7 in the beginning. And there's still a couple of weeks to, or a couple of days that need to be taken out right here for this month. We'll just have to wait and see what happens. And remember, we also have that big gap right here that needs to get filled. then again, these videos are for educational purposes. Only your results may differ from mine. So just remember that. The wick zone, in and out, once again, to the upside, then to the downside. Playing either one of those lines or both would have proved profitable. Not hairy hindsight. We do this every day. You just plot the lines on the chart, take the trade. I mean, right here, there was only a small profit to be had, but that small profit was, let's see, 56 was the trigger, 59, 2-pip profit. A lot of people will sneeze at that, but if you do that 10 or 20 times a day, it starts to be real pips. You could have done it again here, but then again, this is the Asian session. You usually don't trade that. Moving into London, that's when you start to get the moves, and New York. Huge M1 return bar right there. Expanding this out, you can see the lower high was pretty much 3,100. So trading that line would have been profitable. And you can see how many times you could have traded that line if you look to the left. Recently, we put in a new 3-ball here. All of a sudden, we got a trigger. Even if you took this first one, your stop loss, if it was placed, say, 1 pip higher than that 3-ball, was never really threatened. And you'd be up about 5 pips at the moment. And actually, that 2-ball would have signaled to me time to get out. A lot of people will be looking for the 50% retrace. And we'll just have to wait and see what happens. And here we can see that 3,100 line. 1, 2, 3, 4 times to the upside. 1, 2, 3 down. A 5th time to the upside. Just trading that one simple horizontal line. Could have paid off 10 pips this way, 10 pips that way, 20 pips. Less than 2 hours, you'd be done for the day. Not a bad day, walking away with 20 pips. And somebody goes, oh, that's hindsight. No, we do this every day. And you can see in this one H1, this range here, 116, that's more than the daily average range. If we flip this over to the daily, oh, that's stuck. We locked that into H1 on that one, but I think we've got another range chart somewhere. And you can see here, we definitely went into the ATR range. Now you got to remember, these are dynamic because this is going off the daily low and the daily high. So as this put in a daily low, these are moving down. As it puts in a daily high, this is moving up. So it's always relative. Okay, here you can see the average range is 90. Oh, and I did do an upgrade to smart ranges where you can also show the ATR, and they're usually within 1 or 2 pips. And you can see right now we're at the pivot, and this is the map that I refer to, that when I start the trading day, I like to look at the map. And what I usually do is I'll just start here at the monthly. I'll just take a look, see if anything sticks out. Sometimes I might scrunch the chart just a bit. And nothing is glaring at the monthly. The weekly, I see that missed pivot. I see that missed pivot. Even though that one looks like it hit, but it actually missed. Then on the daily, You know, once again, you look left, I see bearish. I look left here, I see bearish. So that's telling me, hey, price got pushed from those levels to the downside. And then sometimes you can look across here and you can see here this support turn to resistance. I mean, you know, it's almost classic. It's almost to the pip right there. Once again, just simple chart analysis. Doesn't take rocket science to do this. Okay, we've got an H4 missed pivot. You see there was a missed pivot here. So I'd be looking to fill that pivot, and it did. There's also a missed pivot up here. Sometimes that pivot's needs to be filled. And so that's how, when I look at these charts, that kind of gives me a bias one way or the other. And I can go down to H1. There's a missed pivot. M30. I'm seeing these return bars, but I also see this return bar. So price has two ways to go from here. We'll see which one gets returned first. M15, M5, M1, and you see I've got my price near indicator telling me what price is near within 5 pips of the daily pivot. So you can see here in the past minute, we put in a low, almost hit the double low, 31.037, and then bounced, came across the weekly midpoint, current midpoint. Put that back to H4. Then just looking at the rat zone, the wick zone, you can see here we broke out of the upper wick zone as we showed before. There's the rat zone, red rat zone, green rat zone. You can see 110% of the range over ATR. So that means it's okay to reverse. Weekly, monthlies, all okay to reverse. The other ones, be careful. So if it's at 100, it's really okay to reverse. I have this set at 50. I don't remember. I think I was going to put in a multiplier. Did I do that? No. I need to put in an ATR multiplier or threshold. So you might want to use 70. You might want to use 90. You might want to use 101. That's why I like to make things inputs. But sometimes when I first code things, I might just hard code it. It makes it a little bit easier to debug. Once I get that right, then I can turn constants to variables. Plus, the other thing is sometimes I'll change things, and then I might have changed the inputs on the template, or I didn't even create a template, and then when I recompile it, then it throws everything off. So that's just another reason. Or I'll have what I call either my scratch template, I'll save it there, or my work template. I'll just save it that way. I can get things back. Or you can also use the set and load functions of the indicators. But anyway, trading better, you know, sometimes you just have to look and see what you see. I know that might sound fun, but you just have to look and then say, okay, I have something called a stop loss. So if I analyze something incorrectly at the moment, it won't go against me too bad. So, fellow traders, I hope that helps you to trade better. And when you're trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.